Despite some what appears to be strong opposition from some Democrats, the President Biden is forging ahead with his $1.9 trillion in stimulus for the US economy. How is this going to affect the minerals sector? Let's catch up now with one of our regular guests on this particular area of the markets. It's John Meyer from SP Angel. John, welcome. We all seem now to be pointed towards this idea that the markets are going to be assisted further by a massive stimulus program by President Joe Biden. Aside from the politics that's taken us to this point, clearly it's going to help us steer a course out of the COVID crisis. But is it going to affect markets that much, do you think, from your perspective as a minerals analyst?
Yes, it's like a rising tide floats all boats. We are certainly seeing a new mood of optimism coming in. It's not just the Biden stimulus. It's the rapid vaccine rollout in the UK. It's the rollout of vaccines around the world. It's generally more positive news on beating the war or winning the war against the coronavirus than negative news, because there's a bit of push and pull in both directions. But the stimulus packages added to this new mood of optimism is lifting markets, and what we're seeing is metals prices rising, and very interesting news on the potential for deficits ongoing in some of these specific markets.
So do you think we really do need the stimulus? I mean, clearly it's something that that Biden has come to office pretty much on the promise of. I know people were trying to get a Democrat leader in for other reasons as well, but this was one of the things that they were looking at as some sort of help for the US economy. But I would put it into some sort of context. You talk about the fact that metals are going to benefit from this. We actually saw quite a good year when all was said and done last year for the metals markets. I mean, aren't things just happy carrying on as they are? We already knew that China was demanding excess base metals, at least. Surely that's going to continue in any event.
You're right there, Jeremy, but from a rest of the economy perspective, the stimulus package is needed to help a lot of people in different areas. Yes, manufacturing has been strong, although the US PMIs dipped a bit over the last month. But yeah, the money is needed more for other areas. And if you look at infrastructure in the USA, it's been crumbling for years. So this is a great opportunity to pump some money in, reduce the risk of recession. I say reduce the risk of recession rather than avert it altogether. Because I mean, the effects of COVID are going to be much more felt in services sectors rather than manufacturing. So you use the stimulus package just to try and lift everything and avoid the pain in certain areas.
Yeah, talking about crumbling infrastructure, we've only got to look outside our own front doors here in the UK, I guess, in some respects, to see some crumbling infrastructure. But as a minerals analyst, how excited are you for the metals markets from here, and also for your clients as well? Because presumably there is, as you say, this high tide lifting all boats, and people will benefit right around the world. Who do you see benefiting most? What is it that you're most excited about?
Well, I didn't think we were going to see another super cycle develop, in my career. I wasn't sure we would see that again. We saw it in the early 2000s with the rise of China, the very strong growth there. We saw a little bit of development or another rise in the markets after the stimulus package of the subprime crisis. This is going to be very much bigger. We've also got this new electric revolution into electric vehicles and renewable energy generation, wind farms, solar farms for power for those vehicles and to decarbonize our economies. So there's a lot suddenly going on that requires metals, and not just average metals. It's more specialized metals. So of course, copper, nickel, tin are very strong. But the rare earths and other industrial minerals are expected to do very well in this. And for example, the tin market is is now entering its fourth year of supply-demand deficit, and prices are up at 6-7 year highs. So this is where it's going, and not just in tin, but across a range of metals.
But of course, this is exactly the point, isn't it? The fact that the mineral sector can't keep up with what will ultimately, presumably, be increased demand. If, as you say, that tin, for example, is already in deficit, we've already been talking about the possibility that this year could well see a big deficit coming through in the copper market. So it doesn't actually provide us with any more of the base metal. Do you see explorers doing well out of this? Or is it going to be those people digging the existing or known resources out of the ground? Do you think that explorers could actually benefit from this and bring in more money into this sector to just try and find more mineral?
Well, the explorers are already getting a helping hand. The major companies, which have big pots of cash, are pushing funds out to those explorers anyway. They're doing it very quietly because they don't like everybody to know what they're doing. But we're seeing Anglo American, Rio Tinto, BHP, Glencore, and First Quantum Minerals all looking around to make strategic investments, usually within joint venture vehicles, or earning into underlying projects. Particularly in places like Zambia, where there's a lot of activity looking for copper, but also all around the world. And we haven't seen this sort of support for the junior exploration sector for many, many years.
Yeah, just one final question, and I guess this is probably edging towards the outside of what we should be talking about in terms of the mineral sector. I'm a little bit concerned about the fact that ultimately this could well give the inflation a kick. And in fact, I think Larry Summers, the former US Treasury Secretary under Bill Clinton, of course, would already have worked with Joe Biden. I think Larry Summers was saying he's not massively keen on this sort of size of stimulus because it could take inflation up to generation high levels. What sort of impact could that, if that comes about, what sort of impact could that have? Is it destructive on the mining sector, or is it something else that the mining sector is just able to cope with?
Well, we're used to watching inflation in the mining sector. On the one hand, it's good for lifting metals prices because they are a store of asset value. On the other hand, you do get underlying cost inflation, particularly when the oil price rises. But that's really a lesser issue when you think about it. It's the rising metals price that is the dominant factor. But sure, your margins are going to get impacted by high oil prices, high other costs. So it's the rising oil price that is the one to watch, but it's unlikely to have much of a negative impact by the time you've fed in higher metals prices.
Just quickly run through us again the metals you're watching. I mean, you spoke about tin. Copper we've spoken about before. We've gone back above 8,000 a ton. I know your price target there was 10,000. Much more upside for these metals prices?
Oh, yes. I mean, copper's a big market, something over 20 million tons a year. But even so, when you consider the number of electric vehicles being sold, the projections for electric vehicle sales going forward, because they are going to replace an awful lot of combustion engine sales in future years. And so you're talking about turning over the world's, well, much of the world's vehicle fleet. I don't think this is going to affect Africa particularly for a generation or two, but in the Western world, you're going to see an awful lot of cars coming off the road. I think we're quite likely to see a scrappage scheme come back in as we saw after the global financial crisis, that sort of thing to accelerate the move from combustion engines into electric vehicles. I mean, it may not need any acceleration, but remember, when we've all bought our electric cars, we're going to have to plug them in somewhere. And that means we're going to have charging points on every street. We're going to have a lot of copper cabling to feed the electricity to those charging points. There'll probably be some point in time when there's a bit of a restriction on when you can charge, or if you're allowed to use fast chargers and things like that. Remember, governments are also going to want to tax the electricity or the fuel we're putting into our new vehicles. And the battery packs for these vehicles are getting bigger and heavier. That will come and go because, of course, the new Tesla batteries are going to be more efficient. They'll have more power capacity in them, but they're still going to have an awful lot of lithium, nickel, cobalt, graphite, manganese in these batteries, and we just don't. Particularly when it comes to nickel and tin, we just don't know where the metal's going to come from.
Interesting. Okay, look, John, we'll leave it there, but thanks indeed for joining us. John Meyer from SP Angel, talking us through the potential effects of the $1.9 trillion we're expecting from the President Biden stimulus plan. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.